Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull, bear, point, and figure market breadth summary chart for December 3rd, 2017. Market breadth with this past week's market fractional decline, our bull, bear, point, and figure ratio at 1.34 fell from 1.46 last week, declining within bullish territory. The total count of securities in bullish or bearish patterns increased 2% to 3,141. The count of bearish stocks increased 7%, while the count of stocks in bullish patterns decreased 2%. The Pirls PNF market breadth summary chart shows us a market now 14 weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email and free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 86 points for the second advance in 7 weeks. At a positive 210.8 points, it continues below all 7 tops in the last 30 months and continues above all 5 bottoms in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily in a Woody's uptrend is now at a positive 25.17, down from a positive 188.55 last week. At Wednesday 11:15 close, the CCI 20 daily was within the plus or minus 50 range for a zero line reject pivot and long entry signal at Thursday 11:16 close. At Wednesday 11:29 close, it dropped below plus 100, so we exited the trade at Thursday 11:30 open. The result of this trade simulation was a gain of 58.35 points on the Nasdaq, but a loss of 7 cents per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 83 weeks ago, while the daily CCI 20 began a Woody's uptrend 12 weeks ago. The CCI 20 weekly at a positive 125.77, down from a positive 153.02 last week after forming a zero-line reject long entry signal for Tuesday 9/5 open. Our rule is to stay in the trade until the CCI 20 drops below plus 100. We will continue to follow the result of this trade simulation in next week's commentary. Industry rotation. The last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Summary: brokers, banks, oil services, and retail on top. Some tech, gold and silver, and REITs on the bottom. Bullish, S&P retail continues in the top 5. KBW Bank and brokers have entered the top 5. Gold and silver has entered the bottom 5. Bearish, REITs continues in the bottom 5. Computer hardware, disk drives, and networkers have left the top 5. Semis, computer hardware, and comp tech have entered the bottom 5. Oil services has entered the top 5. Focus this week. With Bitcoin surging, we pause to consider the long view of things. In this analysis from www.medium.com/@rusty_lightning, the 3 economic eras of Bitcoin. The following are some key points. The way the Bitcoin ecosystem will play out is written in the mathematics of its consensus rules. We should all know the 3 phases it will go through. First era, Satoshi's free offer, 2009 to 2014. There was surprisingly low awareness that this phase of free money was not the natural state of Bitcoin. Second era, Satoshi's subsidy. We are here. Quote, Bitcoin is shifting to a new economic policy with possibly higher fees. End quote. Jeff Garzik, medium.com, @jgarzik/Bitcoin is being hot-wired for settlement. Block propagation was improved by a global network of node relays and new strategies for better propagation. Free estimation algorithms became more sophisticated, along with restoring the ability to replace transactions by increasing the fee and having the recipient boost transactions. Third era, self-sufficiency, 2028 and onwards. Quote, once a predetermined number of coins have entered circulation, the incentive can transition entirely to transaction fees and be completely inflation-free. End quote. Satoshi Nakamoto, Bitcoin, a peer-to-peer electronic cash system. Once the free money bootstrap phases of Bitcoin are complete, the system enters the phase of self-sufficiency, where users bear the cost of securing the network against double spending, currently billions of USD each year. This is phased in by having the block subsidy every 4 years. The third era will start with civil war. The battle lines will be similar to the early Second Era New York Agreement, but this effort will be more nuanced and far broader, with mainstream arguments such as 1. The founder was not an economist. Economists recommend inflation around 1% to encourage spending. 2. The support burden of the network should be shared by the wealthy Bitcoin holders, not just those actually using their Bitcoin. The counter-arguments are: 1. The 21 million Bitcoin limit was a key reason for Bitcoin's success. 2. The system's founder made a conscious and deliberate choice for Bitcoin to be a store of value over subsidizing payments by eschewing inflation. And 3. Changing the rules now is stealing from early adopters, notably, but not mainly, the anonymous founder. Although this crisis is entirely predictable from first principles and laid in the bedrock of Bitcoin, it may yield surprising results. And even if Bitcoin's supply remains capped, the drama it can produce is limitless. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.